Today I have an update with regards to a company called Meghna Infracon Infrastructure Ltd. The one-to-one bonus share has resulted in the company jumping 7% after setting the record date for the bonus issue, sorry. So one-to-one bonus issue would be done. The date set, let us look at the date. So record date is 8th of July 2025. 1,189 crore market cap, 52-week high of 1,165, currently trading at 1095 per share, down from 6% from its 52-week high. Stock has delivered 5 years 7,163%, which is phenomenally huge. On Wednesday, the company, through a stock exchange, announced that the company has approved the issuance of bonus shares. So the price of 1,165 would be converted into two shares of about 582 rupees each. So there would be a bonus issue of 10 rupee each for every 10 rupee a share face value held. The board of directors have set the record date as the 8th. Stock has delivered. We'll go into the financials in the next bit. So this article come information has been extracted from various different sources on the internet. All the investment opinions and recommendations mentioned are solely those of the respective experts, broking houses and rating agencies. These views do not reflect any personal opinion or advice. The market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from decisions based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decision. So, this is the logo of the company. It's called Meghna Infracon Infrastructure Ltd. You can see the price today is up 5%, almost to 1100 rupees. Over the last 5 days, 1.55%. Over the last 1 month, the stock is up about 8%. So whatever gains that it had made today, uh, from about 7% odd, some correction has happened. From there on, people must have booked in some profits. So the 7% return turned down to about 4.7%. So overall, sorry, so the price which reached about 1150 has now come down to about 1100 by the end of the day. So we'll look at the financials now. Incorporated in 2007, is in business of builders and running hotels. Okay, so it builds buildings and also runs hotels. The high of 1165, low of 356, price to earnings ratio of 129, which is very very high. Book value is 20 rupees, which again suggests that the price of the stock is very very high. It's nearly 55 times the price of its book value. So I don't think really this stock is worth investing and buying at that kind of price. The market cap of the stock is also pretty small. Return on capital employed is 70%, return on equity is 52%. So here return on capital and equity shows a high number. However, when you have to pay the actual price for the stock is way too high. Book value of the stock per share is only 20 rupees. So I mean it's very very highly overpriced. Tax rate is low. Debtor days have increased from 39 to 65. Then these are the various peers you can compare with. Again, you can see Prestige Estates 156. The price to earnings ratio of most of the companies is very high. Sales, you can see only 12 crores, which goes to show that the revenue has gone up in the last 6 months. However, the volume revenue is too small for the company, and the price that it's being traded at is very, very high. Net profit has grown from 3.6 crores to 4.15 crores, which is good, but it's a very small valued business company. You can see overall year to year sales, there is a drop of about 20% within the last 1 year. Though you can see the net profit from 3 crores has gone up to 9 crores, which would be the reason that the stock has been doing well of late. Sales growth minus 25%, profit growth 190%, stock price growth of 200% in the last 1 year. So there you go, there you see last year return on equity is 53%, which is amazing. So reserves grown from 2.33 crores to 11 crores. Borrowings have increased slightly. Liabilities have also drastically gone up for a small sized company, for which would mean, if it is borrowed money, then would result in higher interest payments. You can see debtor days gone up by 5%, inventory days gone up 3 times. So company is holding inventory almost 11 months worth. Uh, Days payable is 109, which is a huge jump from 7 days. Cash conversion cycle has gone up by almost 2.7 times. Again, doesn't seem to be a very good sentiment. Company promoter holding 47%, FII is 1.9%, and public holding of 51%, which is huge. So again, high volatility in terms of volume and in terms of price, and negative sentiments can easily drive the company into an oversold zone. So friends, please share this video with your friends, family and associates so that they could benefit from this information. Highly important that you consult a financial stockbroker if you are holding this stock as a part of your portfolio, as the price available and the book value of the stock is too poor, and to pay such a high price for such a company, it seems highly overpriced. So something that needs to be done to keep a track of it. And if you are considering investing in this stock, I would suggest you ignore this because the price is very high, and it, any sort of negative sentiments which could mean a drop in the net profit or drop in the revenue of the company would lead to a drastic fall and correction in the price of the stock. So something it's like a big, what do you call, a big buzzer, is something that can create, can easily uh, erode your value in terms of money. So be very, very careful with dealing with this particular stock. Thank you for watching, friends. Please share your valuable comments so we could improve the overall content of this video. Thank you very much. Have a good night. We'll connect with another video very soon. Take care. Thank you.